Hello traders and welcome back to my channel. I prepared this video for you because I wanted to share a trading strategy that I use. I use this strategy as a swing trader, but it works perfectly fine with day trading as well. I came up with this strategy after years of trading. I lost money, I made money, and I've been through a lot. But I can say that this strategy is so far the best I ever tried. Even though now I shifted my way in long-term investments, I'm still using this among other strategies in my trading repertoire. I know most of you want to day trade, so I thought this will be a perfect strategy for you. I want you to remember though that no strategy is working 100% of the time with efficient, so we're going to use a stop loss. But I can guarantee you that using this strategy, the odds of success are roughly around 80% if you're following the rules, of course. Before we go in depth with the strategy itself, I need you to be focused on several points. So be prepared to take note because I'm going to jump in my trading view and I'm going to explain step by step what this strategy is all about.
So here is an example of cron on the daily chart. Here's the low, here's the high, higher low, higher high, higher low, higher high. This is an exact definition of an uptrend. But what happened right over here? When we broke the previous swing low, we are no longer in an uptrend, but we are not in a downtrend yet. We are now in consolidation. Okay, we are either consolidate or reversing. So now we have a lower low here. Then we bounce back up and then roll back over. And we have another lower high. What that means, lower low plus lower high equal a downtrend. So now we are in a downtrend. And this works like that the other way around as well. So why I'm telling you that? This is the basic how the price action works. Once you have this in your mind, and I highly suggest you to study this concept more in depth, you will be able to read the chart pattern more efficiently. Once we know this concept, we're going to have the first three indicators for this strategy and also my favorites. The 12 EMA, the 26 EMA, plus the 200 EMA. And what do we notice here? Let me tell you. Everything we saw previously in the price action regarding the trend change, well, the 12 and the 26 are going to spot you exact moment when the trend will change. And also, they will serve you as a guide, supports, resistance in every single time frame from the 5-minute till the 1 day zooming out. That's great, no? So what about the 200 EMA? Well, the 200 EMA serves as an important role as a confirmation that we are in a trend. First, you will see the 12 and the 26 cross. Then, if the 26 EMA crosses finally above the 200 EMA, you have a strong trend in play. And here it comes my strategy. Because once we have the 26 EMA above the 200 EMA, we're trending up. And when we have the 26 EMA below the 200 EMA, we're trending down. Be careful though, we are looking on the daily time frame. Now you're wondering, how about the strategy though? Well, we have to add another indicator, which is the RSI. And let me tell you why and how to use the RSI to complete the strategy. Me, as a trader, I want to be sure that I'm trading with the trend and not against it, if I am day trading or swing trading. But this is one of the most difficult part as a trader because how many times you thought buying a correction and you ended up buying a falling knife instead. With this strategy, I aim to buy an healthy correction, an healthy buy the dip. I want to be in profit fast and lock in profit super fast. That's why I'm going to use the RSI, because in every market, when there is a strong uptrend, people are going to buy the dip. And you want to catch the initial part of the trend and not the final part, nor the consolidation, nor the reversal. So keep in mind, the first buy the dip in an uptrend are always the strongest and the most profitable. So in this chart, I will show you how the strategy works finally. If you want it to go long, you need to have the 26 above the 200. If you want to trade in the smallest time frame, such as the 1 hour time frame, you have to check first the daily time frame. If the daily time frames respects the rules of the strategy, meaning the 26 is above the 200, and even better if the 12 is above the 26 and the 26 above the 200, you zoom out to the 4-hour chart. And you have to be sure about the same for the 4-hour chart. Only once the 4-hour chart and the daily chart has the right setup, you can now jump on the hourly time frame. Once you are on the hourly time frame, be sure that the 26 is above the 200 EMA as well. And once the RSI is in the 30 area, you can now buy the dip. Try to be fast because the dip in an uptrend are usually flushed down followed by an aggressive buy, and you want to be there when it happens. Try to be picky and put your stops under the two previous swing lows. Lock in profit whenever you feel comfortable. I can tell you that and when. I always suggest to use this strategy on a 4-hour chart because it works better and you can get more reward. But if you want to use this strategy on the hourly chart or the 15-minute chart, that's fine. Always use stop losses under the second previous lows and always respect the rules. Do not improvise. The more you do this, the more you will adjust the strategy for yourself and the more better you will become. Try to paper trade at the beginning. A nice twist that I always used to do is scaling down the entry depending on my budget. Suppose I have 3K, I will make 3 entries so I can get best average. You can use the same strategy if you want to go short. Of course, if you want to short, the 26 has to be below the 200 and the RSI is around 70 or 80 in order to short. It's the same strategy the way around. So, as you can see, it's a simple strategy but works under a solid concept, so do not underestimate this powerful tool. I hope you learned something new today. And if you made this far, please subscribe to my channel so I can keep uploading new material. Thank you for watching and on to the next one.